Hey everyone, welcome back to Corporate Decoded, the place where we unpack the confusing world of corporate finance and leave you a lot smarter about where your money is really going. Today we have a report that looks like a simple update but has some important details about a company's borrowing power. Let's see what that means for AdvanSix Incorporated. Before we dive in, if you love getting these kind of unfiltered insights directly from SEC filings, then make sure you hit that subscribe button. We also have a community Discord linked in the description below where you can connect with fellow analysts. Alright, let's get started. So what we have here is a current report from AdvanSix Incorporated filed on the 23rd of October 2025. This report isn't a deep dive into their quarterly earnings, but rather an update about a significant change to their borrowing arrangements. Think of it like renewing or tweaking a major loan, and that is kind of what happened here. The core of this report is about an amendment to their credit agreement. Now, their credit agreement is essentially the contract that outlines the terms of their loans, the interest they pay, and when they need to pay it back. This is called Amendment Number 2, meaning this is the second time they've made changes to this specific borrowing deal since it was first put in place. The original agreement was dated way back in October 2021. They've already made one amendment in June 2023, and now they're at it again. This amendment is primarily about something called revolving credit facilities. Imagine a company has a large credit card limit that they can borrow from as needed and then pay back. This is similar but on a much bigger scale. AdvanSix had a total revolving credit facility with commitments totaling $500 million. What is important here is that most of this borrowing capacity, specifically $452 million, has had its repayment deadline extended. Instead of needing to be fully paid back in October 2026, the deadline for this large chunk has been pushed to October 2027. This gives the company more breathing room to manage its finances without the immediate pressure of repaying such a large sum. This is generally a positive sign as it indicates the lenders are comfortable enough with AdvanSix's financial health to extend the terms. However, not all of it got an extension. The remaining $48 million will still need to be repaid by the original deadline, which is October 2026. This means a smaller portion of their debt is still on a shorter timeline. So why is this amendment important? It shows a few things. First, AdvanSix is likely managing its cash flow and doesn't want the pressure of a large debt repayment looming too soon. By extending the maturity date for the majority of their revolving credit, they're signaling a strategy focused on longer-term financial stability. It also demonstrates continued confidence from their lenders like Truist Bank, who is the administrative agent in this deal. Lenders typically only extend credit terms if they believe the borrower can eventually repay the debt, and the fact that they agreed to this amendment suggests they're comfortable with AdvanSix's future prospects. From a business strategy perspective, this move allows AdvanSix to potentially allocate capital towards growth initiatives, research and development, or weathering any unexpected economic downturns rather than being solely focused on debt repayment in the immediate future. It is a way to de-risk their financial operations. On a broader note, AdvanSix is a diversified manufacturer of ammonium sulfate fertilizers and also produces a range of chemical products for various industries, which means their financial flexibility is key to maintaining their operations and competitiveness. This amendment to their credit agreement directly supports that flexibility. Now, looking at this filing from a high level, what is the story here? It is not about explosive growth or sharp declines, it is about prudent financial management. AdvanSix is proactively adjusting its financial obligations to better align with its long-term business plans. The extension of the credit maturity date signals a desire for stability and continued operational investment. So what does this really mean for AdvanSix? On the positive side, they've secured more time to repay a significant portion of their debt. This eases immediate financial pressure and allows for more strategic deployment of resources. It also suggests a degree of trust from their banking partners. On the other hand, the fact that a portion of the debt still matures sooner might indicate some specific financial considerations or risk assessments by the lenders. Our take on this filing is that AdvanSix is playing it smart by managing its debt structure. This isn't a dramatic announcement, but it is a solid step towards ensuring financial stability. The key will be how they utilize this extended financial runway to drive actual business growth and profitability. The company's direction seems to be one of cautious expansion and financial prudence. A notable risk could be if market conditions change, unexpectedly impacting their ability to manage the remaining debt, or if they don't effectively leverage the extended terms for growth. However, the overall opportunity is a strengthened financial foundation enabling bolder strategic moves. Alright, that's our breakdown of AdvanSix's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.